Hello friends, this is Ram Gopal Verma. I am a chartered accountant and cost accountant by my qualification and practicing as insurance surveyor for last 35 years. Out of my experience, I have written this book, INSURE and SEUCURE for fire insurance claims, that contains practical case studies, full chapter on GST. How does it affect the insurance claims? The purpose of the book and today's YouTube video is to share knowledge with all the people, the complications in case of plant and machinery assessment. Whenever there is a fire, you will be noting that apart from stock, machine is equally burnt in the fire. So apart from bills, etc., what else you need is GST. GST is very important these days. So friends, for example, you buy machine worth 5 lakhs, you pay 18% GST, that comes to 90,000, fine. You pay the other person 5 lakh 90,000. What does he do? 90,000 he will credit to your GST account as per your GST number. So what will happen? For example, your liability against your sale etc. is 1 lakh rupees. So this 90,000 rupees you can adjust and you have to pay only balance 10,000 rupees. So this is how GST works. So this goes to your credit. Now, in case of a fire in a plant and all that, the GST etc. whatever has been taken credit of, you have to surrender under GST 3B. You will have to surrender and you have to give necessary proof to the insurance surveyor that yes sir, my machine has been burnt in the fire and I have surrendered in GST 3B. You have given the proof. Beautiful. Now come to the next part. Life of a machine, which is very different in case of GST. This is life is 5 years fixed. That's all. No other method, irrespective of the real life of the machine, irrespective of engineer's report, irrespective of the machine by any other means, whatever life you are taking. So for the purpose of GST, the life of the machine has been fixed as 5 years. Now illustration 1. For example, you purchase a machine and GST 90,000 credit you have taken, and for example, 2 years you have already used the machine. So that means 60% you have already, 40% you have already used the machine. Now balance period is 3 years. So out of the life of 5 years, 2 years you have already used, made production, etc. Now 3 years is the balance period. So you have to surrender. That means 54,000. That is 60% of 90,000. 54,000 you have to surrender in GST 3B. And you can take this credit, whatever amount you have paid to the GST department, reverse in the GST 3B, that you can claim along with your claim from the insurance company on account of plant and machinery plus GST 54,000 what you have surrendered. This you will surrender in GST 3B and accordingly you can lodge a claim for 5,54,000 for example in this case. Now there are two methods this GST department has given. One is a monthly method where total life of the machine is 60 months. So whatever months it has been utilized for the balance period you can surrender. So you can divide by the total GST amount divided by 60 into the number of months. Or you can take it, second method is by quarterly method. There are, for example, how many? Say total 20 quarters are there. Out of that, whatever quarter you utilize balance for the balance quarter, it has to be surrendered. Now, this part is very clear to all of you that you have to surrender for the unused period, for the year-wise, month-wise, quarterly-wise. There are 2-3 methods you have to your benefit. And accordingly, you can surrender the GST and claim it from the insurance company. So, claim cost, machine cost plus GST part. Now, lot of machineries are before 1st July 2017. In such cases, you have already availed of the credit for GST and for the earlier excise, VAT, etc. So, that would be considered only the cost of the machinery will be considered for the purpose of insurance purpose. Now, one thing is requiring that a lot of time people do wrong reversal of ITC under DRC 1, DRC 03. DRC 1 and 03, they are when a GST department, they lodges a claim on you that you have made a wrong payment or wrong this thing or you have not deposited tax, please deposit under a notice. In that case, you are supposed to surrender or reverse the GST under GST 01. Not in case of a fire. In case of a fire, the only requirement is GST 3B. So don't get confused. Now, in case of GST 3B, there is a column that ITC reversal in column 4. Eligible ITC. ITC available, ITC reversal in the pair B. So that is where you have to reverse the ITC purpose. Whatever ITC you want to surrender on the machine, that you can surrender in this part. Now, At the time of insuring the machine, say 5 lakhs worth of machine you purchase, that will be reflected in your balance sheet also. Balance sheet does not show your ITC part. So my machine you have purchased, and this is the GST is the 90,000 for example. So one should take very clear that okay, my ITC part I must insure. You have bought a machine today, fine. You have installed and order started, very good. Now at the time taking the policy, the amount should be 5 lakhs plus 90,000. No, 90,000 should be included very clearly that my 100% of my GST ITC which I am availing, I am taking it as ITC, but I must insure it also. So at the time of taking the policy, one should be very clear, 100% of the GST ITC should be covered in the sum insured. So that at the time of loss, insurance company can indemnify you, because you have to surrender in case of a fire and all that. So right now, ITC, there is no other use you have made, it is just a new machine, so it should be 100%. Now gradually, every year, 20% is every year portion of ITC, because 5 years is the life, 20% is the GST. For example, around 90,000, 18,000 is for this year. Suppose you have made use of 18,000, next year there is a renewal of your insurance policy for fire claims. Okay, fine. In such claim, in such a case of fire policy, you should insure next year for how much? 80%. Then next year you can reduce to 60%, 40%, 20%, then 0. So every year out of the 5 lakhs will continue. There is the value of the machine. The GST ITC part every year you should keep on reducing 100, then 80, 60, 40, 20, then 0. So you should always reduce down so that you don't have to pay honestly insurance premium on ITC purpose, which is yet to be avoided. So that is, though 100% you have taken, but for the purpose of insurance claim, you will get a refund from the insurance company if you surrender it. So every year reduce down the ITC part. Now, lot of big companies, they have got a strategy that I want to take benefit under depreciation, I want to defer my liability and all that, whatever income tax benefit I want to take. What do they do? For example, 5 lakhs worth of machine, 90,000 is the GST, they will capitalize for 5 lakh 90,000 total. They will say, sorry sir, I don't want to take ITC credit at all. Big companies, they got crores and crores, 100 crores, 1,000 crores, machine, etc. They say, I don't want to take any benefit of ITC. I will completely capitalize and take benefit of depreciation. And for next couple of years, more than 5 years, they can take the benefit of. So in such cases, if they have not taken ITC, you can pay them cost of machine plus GST part. Whatever they have not availed of, that is part of their cost. So as a cost accountant, I can tell you, in such cases, 5,90,000 should be the amount, whether it is day 1 or day 2. The GST part will remain the same 90,000. You can pay to them even after 5 years also. You can say that okay, you have capitalized the machine for this much of period. Now you can take, because ITC you have not taken. Now in case of exempted supplies, there is another thing that a lot of people they do business. For example, the rice industry. They are doing the rice, all that processing. After that, there is no GST on a rice. So there is no liability. In such cases, whatever machine they are buying, on their whatever GST is there, they will capitalize. They will say, sir, I am not eligible for any ITC benefit at the time of sale. So, sir, I won't take any ITC benefit. So, though it is showing in the portal, there's so much of ITC is there, but they can't avail. And after November of the same and end of the calendar year, end of the financial year, then in the same that year up to November end, they can take. So they say no, we don't take. So they can easily say that yes, sir, my exempted supplies are there, so I don't want to take any benefit of GST. So in case of a loss, in case of fire and all that, you can simply tell them, okay, you are eligible for the full claim. So that is 5 lakhs plus 90,000, they will get the complete. So these are the things I want to share with you as a chartered accountant and cost accountant and as a surveyor. In case of a fire claim, how GST should be handled in case of a damage to the machine, etc. So one should be very clear. First of all, you must make sure that my sum insured includes ITC part. You can say, you can argue, sir, ITC already available, why should I insure it? Yes, sir. That is so long as there is no fire. If there is a damage to the machine due to fire, etc., fire, earthquake, and this floods, etc., naturally you will be reversing. So what do? You will pay out of your own pocket? No. Why don't you insure it? It is a win-win for all. Brokers are happy, insurance company is happy, insured is happy, the company is happy. Yes, I am getting the claim on the GST which I will now surrender. So what are the treatments? As a surveyor, I have told you, these are the treatment you should do. As a broker, I have told you how you should take the sum insured. As an factory owner, as insured, I've told you, okay, you should take proper policy. As a surveyor, they always do a proper assessment. So all the young people across the country, I want to share with them how GST should be treated in case of a fire claim, in case of machine, etc. So thank you very much. My only purpose of sharing this video is to enrich knowledge of all the surveyors and help all the insurance companies and insured across the country. Nandri, thank you, namaskar. This is Ram Gopal Verma.